Hi everyone, I'm Reid, partner and head of markets here at EY in Ireland. Welcome back to Take 5, where I'm joined in studio every couple of weeks by experts from across our firm so that you can get the latest need-to-know information about the market, our business and our offerings. In this episode, I'm joined by assurance partner Derarca Dennis, who leads our CCAS and FAS practices here in Ireland. One of the areas that Derarca leads out on is non-financial reporting and ESG. Derarca, thanks very much for joining us here today.
You're welcome, Graham.
My first question is for everybody here listening is, tell us a little bit about what non-financial reporting is all about.
Well, Graham, non-financial reporting comes from the wider stakeholder community, beyond the investors who buy into businesses, demanding new and better information about the businesses that exist in their communities, looking for social information, the impact the business has, and also for information with regard to the environmental impact. So really wider agenda, broader community of people looking to get better information about businesses that we all work with.
Very good. And I know there's a huge amount of regulatory change coming down the track and changing all the time, in fact. What does that mean? What's coming down the track and what does it mean for our clients?
Wow, well, there's a lot coming down the track, Graham. I think for every client it will have an impact because regardless of whether you're caught by the regulation, you'll be asked for new information from throughout your supply chain, if you think about it from a supply chain context. There's three big things happening. Well, TCFD, which has happened already. It's already in place and the UK actually has mandated it from April 2022. Then you have the EU taxonomy, which again is already in place, but it's coming in a piecemeal fashion. So there's 6 components and there's 2 components already in play. So there's new information being required to be presented in a consistent fashion. It's trying to get apples with apples, the same information so people can understand the impact of businesses. And the third one is the CSRD, which is brought about by the Green Deal. And what it is again, another framework, sustainability reporting framework that would come out over a 3-year period with, I suppose, the first group coming in 2024, reporting in 25 for large businesses. So that'll come across, and in 2026, small businesses will be impacted for reporting in 2027. So it's coming to all our clients really across Europe and here in Ireland, and even for private companies, they will be asked for new information. So I think everyone can expect to start having to answer questions and think about where they're impacted. And
would that be the same for our US clients?
Absolutely. It's funny you should say that, Graham. The SEC came out a couple of weeks ago with guidance on what they want and also requests for information. The timing isn't quite clear yet, but yeah, the US clients, so we're going to see a global change, huge move, and it's great news for those of us that are into the sustainability agenda.
That's great. And as I listen to you, there's a huge amount of change coming down the track, huge amount of things to get our heads around. But yet on the CFO survey, actually it shows that the whole non-financial reporting ESG agenda has gone down a little bit in terms of priorities. What do you think is driving that and what do you think we should be thinking about?
Well, yeah, that was a bit disappointing personally, but look, I kind of expected it. Look, there's a lot going on in the world at the moment in terms of geopolitical unrest, inflation, war for talent. So companies are really, really challenged. So I think that's why it wasn't there, but it still is important. I think we have to continue having conversations with their clients, reminding them about the legislation coming at them, explaining to them that they will get new information requests from suppliers, even when they're doing pitches. They're going to be asked for new information. They're going to have to prove what they're doing in this space. So I think, it shouldn't go away, but it's kind of moved to the side because of other big issues at the moment.
So look, this is a really important area. So thank you very much for Derarca. And look, as you can see, this is a lot of technical issues in there. So details of who to contact, along with a 1-page snapshot of the regulations that Derarca mentions, as well as our link to our recent CFO survey report, will be included in the email along with this video. Thank you very much to all of you for listening here today. Please do keep an eye out for our next episode in 2 weeks' time. But in the meantime, please have a really great bank holiday weekend. Bye for now.